Welcome to another session of OOIDA's Business Education Series. OOIDA is proud to offer the most comprehensive business education series available for America's professional truck drivers. We would like to thank our many friends in the industry who take educating America's professional drivers as seriously as we do. With the help of these sponsors, we've been able to make the programming on the Business Education Series free to all drivers. This program is being sponsored by our friends at Taxation Solutions Incorporated. When you need tax consultants with experience, the right credentials, and the ability to help with penalty abatement, audit defense, and tax settlements, look no farther than Taxation Solutions Incorporated. Taxation Solutions has experienced tax attorneys and enrolled agents that have assisted taxpayers with negotiating and settling their IRS debt. Their overall goal is to get you only the best deal available with IRS relief. Live again without the fear of the IRS. Contact the professionals at Taxation Solutions. You can reach them on the web at www.taxationsolutions.net or by phone at 888-997-2215. The topic for this series is dealing with the IRS. In this series, we're going to be discussing tax issues which, unfortunately, are all too common in the trucking industry. And in this program, we're going to be talking about what your options are once you discover you have a tax problem. My name's Tom Gann, and once again, I have the pleasure of hosting this program. Today, we've got a guest that is truly a heavy hitter in the tax industry. He frequently appears on CBS, ABC, Fox, Yahoo Finance. You may hear him on the Joe Pag Show, and he's a frequent guest on the Red Eye Radio Network. I truly am honored to have Barry Fowler as our guest on this program. Barry is the president and founder of Taxation Solutions Incorporated, and he also holds the title Enrolled Agent. And for those of you who don't know, this enrolled agent status is the highest credentials the IRS awards. These enrolled agents, they're unrestricted as to who they can represent. They can represent their client for any type of tax matter, and they can also represent them in any IRS office around the country. Barry's been recognized as one of America's premier experts in IRS relief and taxes. He's helped hundreds of people solve complex tax issues with the IRS, and we're truly honored that he's agreed to be with us here today to share his insights. It really is quite an honor. You know, Barry, a lot of the guys that are owner-operators start out as a company driver where they received a paycheck and they got a W-2 and paid their taxes. Then they get their own truck, and all of a sudden they're a business owner, and they're a little confused about taxes. Maybe they don't pay those quarterly tax payments they're supposed to be making, and before long they find themselves in tax problems. They've got a problem with the IRS. Are these the kind of guys that you deal with?
Those are exactly the people we deal with, and what we find throughout the years is that their first year in business, it hits them as a surprise. You know, they're not aware that they should have made their quarterly estimated tax payments. They weren't prepared to pay the tax at the end of the year. Maybe they didn't even do a very good job of keeping up with their bookkeeping, throughout the year.
Well, that's one of the things we really stress, that they get help with their bookkeeping, especially that first year.
Yeah, and that first year is where it all starts and begins, and then it becomes a snowball effect from there, because if you don't file that first year because you find out you owe $10,000, maybe $20,000 being an owner-operator, the next year it becomes even worse, and you don't want to file the previous year, and then we're down the road 4 or 5 years later owing even more money. So that's the kind of people we're talking about today, of helping to get through their tax problems.
You mean it's not a good idea just to avoid it, play like it didn't happen?
No, you can only avoid it so long. You can only put your head in the sand so deep, and IRS is going to find you.
Yeah, they always do, don't they? Well, a guy that finds himself in this situation, what should he be doing?
Well, first off, don't avoid the letters. I mean, they're going to send you letters. You've got to receive those letters, look at those letters, and understand the letters that they're sending you. I don't always recommend you go it alone versus the IRS because they are the most powerful collection agency in the world. But if you do, you got to know what you're doing. You've got to make sure that you're answering their questions, you're answering the IRS, and you're being responsive because it just gets worse if you ignore them.
What are some of the pitfalls and traps that people need to be aware of?
Well, there's not always an easy answer to everything. When you ignore the IRS, what you're going to find is the IRS coming after you and getting stronger in their collections, where they're doing liens, levies, wage garnishments if you went back to being a W-2 employee, even garnishing your contract work, right there from people that you're doing trucking for. You got to watch out for that. So you got to be responsive. The best thing to do is make sure you've got your taxes filed and then go from there.
Yeah, it's kind of a good idea to go back and see what you really owe because sometimes that's cheaper than trying to get out of this tax bill, isn't it?
Oh, yeah, very much definitely. And one of the things we find in people filing their taxes, and especially independent truckers, is they don't get all their expenses. And so they've over-reported what their income is versus their expenses, and they pay more tax. So once we get into things with them, we're able to help them identify, additional expenses and identify things they did not deduct. And so they, need to work through that. But one of the big problems that they have is by not filing the returns, they get hit with penalties for failure to file, failure to pay, and all those just continue to add to the debt. So you need to get those returns filed whether you can afford to pay for them or not, and then deal with it from there.
And can't the IRS go back 3 or 4 years? And boy, I know if they did that on me, I would really have trouble coming up with receipts from 3 or 4 years ago. Isn't that a problem?
Oh, yeah, and actually the IRS can go back further than that. If you haven't filed, you'll see the IRS put in what they call SFR. And that substitute for return is going to be a very basic return. It says you received X number of dollars on your 1099, that's your income, and you're going to pay self-employment tax on it. The deductions they give you is going to be single and no other exemptions or anything else you deserve. Most of our truckers that we deal with don't keep their receipts for 2-3 years, much less 1 year. And, so they need the help to go back and recreate what their business was and what their expenses were and get the tax down as low as possible before you even begin to fight.
So once you determine that you're in trouble and you need help, what are the first steps you should take?
Well, some of the first steps is just making sure you receive the letters and then answer those letters with the IRS. So whether you're using a professional or trying to do this yourself, you've got to make sure that you're proactive in answering the letters with the IRS and then go from there. There's a lot of different solution choices that you can go through, so you need to be fully aware of all of them. And you've got to look at each one of them before you jump off the deep end into it.
Okay, that's a great idea. Let's take a look at each one of these. And you said there was 4 of them. I know that first one is try to create a payment plan with the IRS. Let's talk about that a minute.
Well, payment plans are generally very easy. The IRS will expect you to pay, let's say you have $10,000 of debt. They're going to want that at the very farthest out would be over 60 months. And you can call them, set that up, and if you can afford what they're telling you to pay, it becomes a very easy payment plan. Now, you go beyond that, it becomes a little bit more difficult. If you can't afford to pay, there's some other options based on the amounts you owe.
Now, you said these payment plans are easy. They might be easy to set up, but may not be so easy to pay. If we can't pay, what's the next step?
If you can't pay, you have other options available to you. We'll go a little bit in depth on these types of payment plans. If you're owing less than $25,000, you're going to have, like I said, that easy payment plan that they'll set up over the 60 months. But if you can't afford to pay it, then you've got to show them what kind of income you have coming in, what your expenses are, and then you get your net income from your business of running your truck. And then you've got to show them what your household expenses are. And then they'll tell you whether or not you can afford to pay it.
Now, Barry, I know a lot of drivers set up their business as either an LLC or an S Corp. So if they've set their business model up like this, will the IRS still want to know about their personal income even though they're an LLC?
Because the tax that we're talking about, because of those other two entities of LLC and maybe an S Corp pass through to the individual, all the tax we're talking about right here is personal income tax. So it's all the tax on your personal return. So yes, they're going to want to know everything about your household, what you have coming in, both for the husband and the wife, what expenses you have going out for everything from your mortgage to medical, you name it, they want to know it.
And that's really to your advantage to report all that, isn't it? They're going to allow you enough money to live.
Really?
I know it doesn't seem like it.
In their opinion of what enough money to live is completely different than what my opinion or your opinion might be of
I'm
what
sure
we can live on.
Is, yes.
You know, what they think is, here's our national standard and everybody should conform to, that amount of money. What you're going to see in these payment plans and what they ask for is a 433A, which is a personal financial statement, and a 433B, which is the business financial statement. And because you're probably the sole owner of your LLC or S Corp, they're going to want that information on that LLC or S Corp. And your 433A is basically the IRS's roadmap to all your stuff, everything you own personally. Now think of it this way. When you fill out that 433A, you're giving them all your bank account information, what your mortgage is, what your home's worth, what your payment is, your IRAs, 401ks, any other investments you may have, your vehicles, year, make, model, mileage, what you owe, what it's worth. So you just laid out to the IRS a roadmap to everything you own.
Okay, that's the personal side of it. Now the 433B, I believe you said that was the business side. What do they want there?
They want everything about your business. And again, you wanted to know what's going to happen is, again, you're laying out a roadmap to everything your business owns. So they're going to know your business bank accounts and your truck, where your truck's financed, how much equity you have in your truck. And so basically it's going to lay out all your business expenses. Now, that bookkeeping we talked about that you should be doing is going to be key in making sure that you get this 433B collection information statement correct and make sure you're recording all of your expenses. And don't forget those per diems for the overnight travel. Those are easily forgotten when you're doing that 433B.
Yeah, we have a program where we talked about the per diem, and these guys who are going to the box stores to get their taxes figured, so many times those people are afraid to file that full per diem because it looks so high. So, boy, you got to really be careful about that per diem. It's a lot of money.
Yeah, it's a big deduction. And if you don't put it on the 433B, you don't get it. And then just remember, no matter what you do on the 433A and 433B, it has given them an absolute roadmap to everything you own.
Now, I know this would never happen on purpose, but what if you accidentally forgot to tell them about that little place down at the lake that your grandpa left you? Or maybe you forgot to tell them about that Camaro, the one you drove in high school that's still out in the barn.
Now, we see a lot of times on these forms people leave things off because, hey, we don't want the IRS to know about it. But if you have a home or maybe even a second home, truck, bank accounts, the IRS finds all that out anyway. So you go ahead and disclose it. And then the next big thing is you've given them this information. Continue to work with them. Continue to get a payment plan. If you don't like it in the end, you can always call us, and then we can try to help you through it and make this better for you somewhere down the road.
What are some of the other steps that you can do to help these guys out?
Well, the other steps that we do, if you find that you're in a situation where you're trying to put a payment plan together and you can't afford what they're offering you, sometimes you got to accept that and then call us or the professionals out there that can walk that 433 through, where we can capture all those expenses and show them that, hey, you didn't know exactly what you were doing. Our clientele are professional truck drivers, and we are professionals at what we do for taxes and tax resolution. You would never want me to drive a truck. I can guarantee you that. That's why I know how to do taxes, and I know how to do tax relief and to solve these problems.
Barry, I hear nightmare stories about guys who claim legitimate household expenses, things that are important, things that need to be paid, and yet the IRS doesn't accept those as legitimate expenses. What's going on?
Well, they have some very prohibitive deductions. So where you consider important to you, the IRS does not consider necessary to them. So given a good example is you pay for your kids' tuition. Maybe you're sending them to a private school, or maybe they're in college. That is non-deductible per the IRS. It's not a required, it's not a necessity. Charitable contributions. It's very important to most of the people we deal with. The IRS says that is not a necessity. It is not required. That is money that can be paid to them. So that's just a few examples of things they consider to be non-deductible.
Wow. So they consider that if I'm behind on my taxes, my kids should not go to college until I get caught up, huh?
Exactly.
Okay, let's talk about the bank account for just a second. I've always heard one of the first things the IRS is going to do is put a levy on your bank account. Is that true?
Oh, yeah. That's one of the worst things we see every day and on a day-to-day basis. Most of the time it happens is because of taxpayer ignoring the IRS and not working with them, or failing to follow through with what they've agreed to. But when the bank puts a levy on your bank account, they take everything out of your account that day that the levy hits the bank. Now imagine this. Most times when the IRS issues a levy, it happens to be on a Friday, and it happens to fall on a payday. They got to pay their mortgage and utility bills, and there's absolutely nothing left in their account because the IRS just levied on it.
Well, let me ask you this. If you're in trouble and the IRS is sending you these letters, would it be a good idea not to put your settlement check in the bank?
Well, we can't advise you to not put that money into your bank account. What we generally tell them is make sure if you have this situation, you are trying to follow everything through with the IRS that you've agreed to. Because when you start ignoring the IRS or you break your commitment to the IRS that you said you could do, that's when the IRS is going to come after you. And then, yes, you want to be very cautious on where you put your money and where your money's sitting and how much money you leave in the account on any day.
You know, a term I hear a lot is currently not collectible. Can you explain what that is?
Well, currently non-collectible is a status with the IRS where they will actually stop collections. Now, it takes a lot to get there. Basically, it's got to show that you don't have any money coming into the household that you can afford to pay. So generally what you're looking at is maybe, somebody with income of $20,000 coming in a year. They're not going to be able to afford to pay. Now, what it's going to do is just put them out there for maybe a year, maybe 2 years, to where the IRS won't do any collection activity. Then the IRS will monitor what you're filing on your tax return. So if all of a sudden your income goes up, you can be pushed right out of currently non-collectible, and the IRS will continue their collections.
When they're monitoring my income, is that the household income?
Yes, that would also include your wife's income. Now, if she's filing separately, or maybe she's been considered an innocent spouse and not liable for it, they wouldn't necessarily look at her income unless you guys are filing jointly.
Do you have to pay interest on your debt during this time when they're not trying to collect?
No, actually, during the non-collectible, they continue to pile interest onto your debt, but you don't have to pay anything to the IRS. They will send you a single letter every year that reminds you of your debt, but they're not actually pursuing collections, and they're not actually looking for you to pay anything.
I know a lot of people think that bankruptcy is the answer to all your debt problems, and obviously we know that's not the case. But if you're in a state of currently non-collectible, wouldn't bankruptcy be the next option?
Well, bankruptcy is an interesting question, and we answer this, quite a bit. With a bankruptcy, you can get rid of certain tax debts, but there are a lot of tax debts that are not discharged in bankruptcy. So if you have not filed a tax return and you're thinking you're going to go in and file bankruptcy and get rid of all the tax that they filed substitute for return for you, all that cannot be discharged. If you filed returns within the last 3 years and you owe debt on it, that will not be discharged. Now, your other debts might get discharged in bankruptcy, which then leaves the IRS all that extra money to collect from you. So you got to use bankruptcy very carefully, and you got to make sure that the bankruptcy attorney you use knows what your situation is and knows when you filed your taxes and knows what they're going to do to help you discharge as much of that debt as possible.
Filing for bankruptcy, that's pretty much your last resort, isn't it?
There's one last option, and that is the offer and compromise.
What in the heck is that?
That's
Sounds
where
like
you
a last resort.
Well, sometimes it's the first resort. It's the resort that will get you the best result out there, but it's the most complicated choice that's there. It's the case where you hear where people get their debt settled for less than 100% of the debt. So we get a lot of our clients where they'll come in and they'll owe maybe $10,000 or maybe $100,000, and we get them settled for $300 to maybe $30,000. Somewhere in those ranges, we have them all over the board of what we've been able to do for our clients. But that's the most complicated, and that's the negotiating your tax debt with the IRS.
That's where you hear that term, 30 cents on the dollar?
Yeah, you hear those terms, pennies on the dollar. We don't ever advertise pennies on the dollar because we don't like it. It's not a guarantee that it's going to happen. There's a lot of hoops you've got to jump through. There's a lot of requirements that you've got to work through to be able to qualify for that offer and compromise.
Our time's about up, so we need to get off for this program. But dealing with the IRS is obviously very confusing. It's very complicated. I'm sure that it's extremely frustrating. Is it even feasible to think that a truck driver could deal with the IRS on his own?
We've seen some success where, some people have gone through and done it on their own. But, we always tell everybody to be very, very cautious what you do and how you do things. The other reason we tell everybody to be cautious is because what you file with the IRS sometimes is very hard for us to go back and change because the IRS takes you at your word. Basically, what you say is gospel to them, and they're going to say, okay, you now have this available. And then when you hire us or you hire a professional to come in there and do things, we've got to undo some of the stuff that you said to the IRS or that you gave to the IRS, and we have to show it in a different light.
Undo what I said. That's a problem.
It is, especially when the IRS repeats it right back to you word for word. The client said, this, and this, and they don't have these expenses, and now you're trying to show us that they have them.
Okay, it looks like we're completely out of time. If you've got any questions or comments about this program, or if you'd like a certificate of completion for this program, just send us an email to businesseducation@ooida.com. And don't forget to tell us which program you're referring to. Before we get off the air, let me take a minute to remind you to thank our sponsor, Taxation Solutions Incorporated. If you're having a tax problem or you're in need of strong, aggressive representation to deal with the IRS, the professionals at Taxation Solutions can help you reach a resolution by providing the proper knowledge, action, advice, planning, and preparation. It's not too late. Contact the staff at Taxation Solutions. You can reach them on the web at www.taxationsolutions.net. Yes, .net. Or by phone at 888-997-2215. We hope you'll join us online again for additional programming in the OOIDA Business Education Series. This series has been designed to give serious business education to truck drivers who take their business seriously. And don't forget, OOIDA has been fighting for the rights of all truckers since 1973. You can join the fight by becoming a member of our organization. Give us a call at 800-444-5791.